Early this morning, stocks came crashing down. However, they were able to come back and fill the gap. Trump also playing the blame game. The stock market crash is not because of him. Now, we come over and look at the fear and greed index. Right now, we're sitting at 34, dead smack in the middle of fear. Yesterday, when we closed out, we're at 37. So we're still not able to get back over into neutral territory. And after hours, we have a lot of movement out here because let's not forget, right now, we are in the midst of earnings seasons. After the bell, we had Microsoft. We had Meta, we have Qualcomm. If we look at Microsoft after hours, up 6.22%. We come over and take a look at Meta. Meta after hours right now up $18, up 3.39%. Still well off of the current high. We come over and look at Qualcomm after hours. Qualcomm down here just a bit. I believe we also had eBay out with earnings spiking up, only to come right back down. Even though a lot of the indices came all the way back today, filling the gap, I gotta warn you guys, there's still more trouble up ahead. However, when we come over and look at how the indices fared across the board, the Dow was up 141 points. The NASDAQ was down 14.98 points. S&P 500 up 8 points, with the Russell 2000 being down 1.29. When we come over and look at advanced issues versus declining, we had 54% of issues declining on the day. Then when we come over and look at the sectors across the board, energy by far outpacing everything else to the downside. Basically financials, communication services, utilities, consumer cyclicals, and energy all to the downside. And speaking of energy real quick, if we come over and look at a chart of crude oil, this is something we talked about in yesterday's video, the dreaded H pattern. You can see we're starting to enter that zone that we basically identified in yesterday's 5 o'clock video. Now, here's going to be the key takeaway. Do we come down here and form some type of MACD divergence, meaning as we come into the zone, do we start to lift up and out? And does the MACD indicator actually end up producing a higher low? Now, with crude oil prices going down, yes, they're pumping more supply onto the markets, but also when crude oil is normally on the way lower, that normally is another warning sign that the economy is not doing that good out here. We come over and look at the dollar index today. Dollar index was up 49 cents on the session. Then we take a look at the precious metal gold. Gold today basically shot down a little bit, came back up. Gold closed out about $28. I think near the low, I saw gold down roughly $50 or so. Now, when the stock market was going down today, Trump was basically saying, it's not my fault. This all has to do with Biden. He is not going to take credit for this. And something else that I seen today, and I couldn't find that news article before recording this video, but Trump also said this quarter's GDP along with next quarter's GDP is also not his doing. And that lets me know right there that we know that not only today was GDP lower, it was a negative reading the first time that we've seen this over the last 3 years. And Trump is already warning that if we get another negative print, it's not because of the tariffs. It's not because of the policy changes he has been making, which also lends me to believe that the next GDP reading that we get next quarter is not going to be that good. If you guys remember, 2 negative quarters of GDP normally signifies we are in a recession. I know during the last administration, they changed that, but that has been the definition for quite some time. Now, here's another warning sign that we could be headed for a recession. And again, why we keep talking about recession as the economy slows down, people have less disposable income. If you look right here, Beyonce's tickets selling for under $60. And if we scroll right down here real quick, in comparison, we can see that earlier this week, they're selling for as low as $44. And in 2023, we can see that the cheapest ticket you could find was $115. Today, we also had the ADP numbers come out and they came in at 62,000. Now, just so you guys can understand just how horrible that is, if we look right over here, 62,000, they were forecasting 114,000. The previous reading was 147,000. Now, this is making me think also, let's not forget on Friday, what do we have? We have the non-farm employment change. So we're going to see, is the Friday's numbers also going to show that the jobs market is starting to weaken? Tonight, we need to pay attention. The BOJ has their policy statement. Then we come over and look at what other news we have for tomorrow. We get the weekly unemployment claims. We get the final manufacturing PMI, and then we get some ISM numbers coming out at 10 a.m. Now, China creates list of U.S. made goods exempt from the 125% tariffs. Now, earlier today as well. Now, if you think that China's not hurting from this tariff war, China export orders plunge, hit by Trump's trade war. Now, today we did see a little bit of glimmer of hope out here in the stock market. And look at these two charts right here. The S&P 500 goes rocketing up, really, trying to get that afternoon lift going back up, when it's reported that the US has been proactively reaching out to China through various channels seeking to negotiate on tariffs. So I gave the market a little bit of hope today. Now I want to make everybody aware right now, there's 3 prop firms with amazing sales. Apex Trader Funding, 80% off all their valuation accounts. My Funded Futures, 20% off all reset fees. And for the starter plan, you can get it with no daily loss limit till the end of this month. Use promo code Mike. And Take Profit Trader, 30% off all their valuation accounts. No activation fee. Daily payouts possible. Use the links in the description box down below. Able to see the S&P 500 come all the way back up. Not only take out the high from the overnight session, but take out yesterday's high. Now, what's funny about this is today on the live stream, we did a survey. I think Larry wanted me to put out a survey. Will the market break above yesterday's high? Overwhelmingly in the poll, majority of traders answered, no, we are not going to take out yesterday's high. Well, you know what? Majority of traders were once again wrong. And if you guys don't want to miss that next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Tomorrow, we're going to be giving away another Take Profit Trader account live on stream. Now, as we come over, look at the SPY real quick, we see today, basically trying to give a little shimmy on the way back down, giving a glimmer of hope that, hey, maybe we're going to go ahead and go down and try to fill these gaps, and then whoop, right back up, taking out yesterday's high. MACD indicator on the daily chart is still extremely strong at this moment, but as we continue to get more and more data showing that things just simply are not that good out there, I think it's only a matter of time before stocks continue to go lower. For instance, today when you come over to the advanced GDP number, we came in at -0.3. They forecasted 0.2 and the previous reading was 2.4. So if the data continues to deteriorate, it's only a matter of time before stocks are ultimately going to go lower as well. We look over here on the 4-hour chart and we start to see the weakening of that MACD indicator a little bit, starting to flatten out. Not really the 45-degree angle up, still going up, still has a good separation, but I think again we are on borrowed time. Then we come over, look at the 30-minute chart and notice that large gaping gap that we had out here from yesterday. We filled the gap and we're actually closing above value area high. What this signifies to me, it's highly probable that tomorrow or the following day, we're going to come back to 553.03. I think it's highly likely. We also have a minus development in that area, anywhere from value area high up here to about 553.98. Now we come over, look at the futures markets on the 4-hour charts. Notice we dipped down today, whoop, right back up, taking out not only last week's high, this week high, we're back above last week's value area high. If we start getting back below 55.62 and a quarter, then I do want to look for lower prices. But as long as we're above value area high, I want to continue to look for higher prices. I know we're on borrowed time and we still have this large gaping gap. Let me know in the comment section down below, how long do you think it's going to be before we come all the way down, fill in the gap that was left behind from last week? Then as we dive down, start looking at the daily profiles real quick, we can see basically right around 10 o'clock this morning, put the low in, then whoop, rallied right back up. Notice we made it all the way up here to R1. Now, if you also notice, we took out the point of control from yesterday, check mark, we no longer have to worry about that. But now we have an issue where we're closing above value area high, which really is going to come in at a price point of about 55.76.00. The point of control will be down here about 55.34 and a half. Value area low will be 54.95.00. Now, the rule behind this is whenever we close outside of value, meaning in this case, we closed above value area high, then we're expecting that either tomorrow or the following day, so Thursday or Friday, we should come back and revisit, aka test out value area low. If we start breaking below value area low, the next target I would want to focus on will be down here towards that point of control. So if you're an aggressive trader, you can look for a mean regression type of trade, counter trend trade, back down towards value area high. Now, in the event that we do stay above value area high, then we really got to be open to the idea that we're going to go ahead and complete some of these patterns out here. Let's keep in mind, we have this A to B equals C to D pattern, which completes at 57.27 and a quarter. Then we have another A to B C pattern from the lows over here on April 9th, up here towards the high when they announced the tariff pause, back down towards the low on April 21st, which completes up here about 57.80.19. So as long as we are staying above value area high, then I want to go ahead and give the markets the benefit of the doubt and see, can we continue to climb up the wall of worry? Keep in mind, right now we are in earnings seasons, and today we're seeing a positive reaction from earnings. So maybe that keeps up for another couple weeks or so, but ultimately the whole recession thing is going to send stocks lower. Then we come over real quick. Let's take a look at the volatility index. We woke up this morning, the VIX was up. The VIX did close up 2.19% today, but look at the wick on this daily candle. The VIX was substantially higher, but then ultimately just continued to roll right back over. We can see the VIX basically closing near the lower end of the session. VIX peaking out at a high somewhere around 28.15. And I was thinking at one point, maybe the VIX is going to push all the way into the 30s, and then it just quickly erased all those gains out here today. Now, as we come over and look at the QQQs, starting off on the daily chart, what do we got going on? Well, we're able to come right below the anchor VWAP up here from all-time highs, and then we got right back above it. That's still extremely bullish, along with the MACD indicator. 45-degree angle on the way up, good separation of the two lines. Now, we really need to get above this next high volume area right up in here, which you can see right here after hours, we are already trading up another $3.53. We're right near. We get on the other side of that, then we can start to target some of these other high volume areas, 489.30, then maybe even 502.45. Keep in mind, out here on the daily charts, we still have this larger A to B equals C to D pattern in play. So on the Qs, that ABC pattern is going to complete about 493.39. Now, diving down to the 4-hour chart, you can see the MACD indicator starting to weaken a little bit. On the 4-hour chart, we've had this consolidation back and forth, and we're going to see, do we simply slingshot right out of this area, or are we going to start to pull back in the near future? Looking over here on the 30-minute chart, you can see we closed the gap out here from today, and now we're also closing above value area high. So highly probable that tomorrow or the following day, we will come back and test value area high at 474.02. Now, what I will say is that they come out with some more positive tariff news. Let's say there's a major news article that China and the US are coming to the table. You better watch out. This market is going to absolutely explode to the upside. Then as we come over and look at the NASDAQ on the 4-hour chart, notice we have two candles from the very bottom of the range all the way back up to a new weekly high. Right now, we're trading above last week's value area high. We came down, we retested the point of control, made it a little bit lower, and then whoop, right back up. Now, as we come over and start looking back on the daily chart real quick, and we can see we took out this untested point of control at 19,760, and you can see we are miles and miles above value area high. Value area high comes in at 19,594. The point of control will be 19,417, with value area low being about 19,284. Right now, with the after hours price actions, we've seen a 704 point range for the NASDAQ. Now, keep this on your radar. Either tomorrow or Friday, highly probable we come back and we revisit value area high at 19,594. What I will say though, also keep in mind, so if you're a counter trend trader, you want to use value area high. If you'd like to go with the flow of the market, then as long as we're above value area high and we are above the weekly value area high from last week at 19,589, then go ahead, hold on tight. See, can we make it back up here towards this other untested point of control at about 20,082? We also have multiple A to B equals C to D patterns in play. A to B equals C to D, which completes 20,055. And then we have a second A to B equals C to D pattern right over here, which will complete all the way up here at a price point of 20,329. Now, before you buy your next prop firm challenge, you need to be well aware of this. So make sure to watch this next video right here.